Hi, this is Joe. We're going to talk about a specific example. I'm going to use a specific trade. I'm actually going to take another example out of my book. I'm going to show you in the book what I describe. And last week when I was showing you the two time frame pattern using the 18 and 40, I only gave you the one entry example. There is another example for entry, and I'm going to show that today. And I'm going to show how MACD can be a powerful influence on this particular setup. So let's get into the charts. I'm actually going to start out with the book. This is page 60 from the book. On the right side, I want you to be focused. So last week I was talking about the 18 crossed on the entry side, the lower time frame, where the 18 would cross down below the 40 as a setup for the lower time frame. But there is another situation, and if you look down at the bottom, I give another example where the lines don't actually cross over, they just meet. So that's kind of the starting point here, and I want to make sure you understand that both of these patterns are very, I think, very attractive, especially when combined with the higher time frame moving average setup. But you have to be prepared. The market isn't going to give you the same look every single time. Every pullback isn't going to look the same. So you want to be able to look for both of these patterns and know what you're looking for. So let's switch over. Page 82, I've got zero line reversals. And so I go into some different examples here. I give some different examples, but I want to focus in on this one particular one, which is on page 85. So this is SYY. It's a daily chart. And again, what I'm showing here is is that the 18, it does end up crossing down below the 40, but by that time, the stock had already started moving. So I would really consider this the second version of this signal. And if you notice, what's happening underneath is the MACD is cupping around right at the zero line. So if you have this situation, let me try and zoom in a little bit. If you have this situation where a stock is pulling in and it's taken a pretty good time, it's taken its time. It's not like it's been a really quick pullback. I mean, it's done it the proper way. And the MACD line does not cross down below the zero level. And both lines are it's more of a horizontal consolidation rather than a really steep downward one. I think in this example, I would be inclined to be looking to buy this as soon as the MACD crosses above its signal line, or if you have a trend line in place, you can just buy it based on the trend line break. So let me actually go to this is the chart of SYY. I've highlighted the vertical line actually shows the exact point where I'm describing in the book. If you notice right here, I've got this vertical line here. So what I wanted to show, there's a couple of things that I think are pretty important. So number one, if we go and look at the monthly, I mean, look at the fact that the 18 and the 40 are both rising, and they're doing it at about the same rate. I've mentioned this in one of my earliest videos, and it was really when I only had a couple subscribers. And so I think it's worth reiterating that you want to look for a pattern, even if you're not looking for ADX or looking at the ADX or the MACD, but if you're looking for which stocks you want to be trading, make sure you find the ones on the higher time frame where the 18 is above the 40 and both lines are rising at about the same rate, where they almost look parallel. And when you have that, you're in a very, very strong trend. And that was the condition in place when this pulled back here and when it started to move higher. If you go and look at the weekly chart, it actually had the exact pattern that I described last week. Go back to the video from last Tuesday. It shows this exact. I give several examples of the setup where you have the 18 below the 40 on the lower time frame, and the price is below. And then when you cross above the 40 or even close above the 40, that would be your entry signal. So if we go to the lower time frame, the daily, this goes to the point that I was showing in the book. And that's where the signal isn't allowed to take place, essentially, because by the time the 18 crossed down below the 40, price was already rising and moving above it. So in this example, this is a really strong version of the exact same pattern that I showed last week. But I want to make sure you understand that it's the type of thing where you have to adapt. You can't sit back and only wait for one signal. If you're watching this stock and you have it in your list, or it's a stock you really want to own fundamentally and you're looking for an entry, don't sit back and only wait for that one pattern. There are two versions of this. They happen quite often, and it's actually the zero line that I wanted to focus in on. The fact that you come in and hold the zero line, I think, is really important. One big tell in this pattern is when the ADX is very low. If ADX has moved down to a very low level at the same time the MACD is doing this zero line, that tends to be a very bullish sign, something you want to be on the lookout for. So anyway, I thought this was a good example just to be on the lookout for two different types of entry setups or trigger setups that can take place with this 1840 pattern. All right, thank you.